What's up, everybody? Welcome to the chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. Things are looking a little bit better after the craziness from last week. I'm kind of got myself acclimated to this temporary studio, so hopefully I sound better. Hopefully I look better, and I'm going to look a whole lot better as well. I got two guests coming on today. So stick around for that. But guys, the market is on absolute fire. We have stocks that we're going to be covering for earnings as well. We got Disney, Matterport, Bumble, Sonos, Dutch Bros, and Coupang. And I'm not going to go any further without bringing some folks on with me. And one guy, you might not recognize him at this point, but it's Fat Man Zoom. Fat Man Zoom's in the stream, baby.
But I was so tempted to hijack your intro and just throw myself in the stream. So for you guys that don't know, that are in the chat, I can actually add myself if I wanted to, and it was awfully tempting. I just wanted to. You should have. What's up, YouTube fam? What's up, Chaos Crew? What's up, Brad?
What up, my brother? It's so good to have you in here, and I wanted to give you the honors of the starting five, if you'd be so kind to do so.
I hope this is right. I'm going to give the first five that show up for me: Tammy J, Gabe, Pauzilla, the one. What is that? This is a person that's a Chaos
regular. Yeah. The 1D Lee, I think.
The 1D Lee. I don't think the 1D Lee has been like on the starting five, so we've never had to. Karem, Bostanki, what's up? And Froggy, what's going on? Bonus, Philip Stroh. Good to see everybody. Good to be here.
That's right. If you guys don't know who Fat Man Zoom, if you're a newcomer to the channel, Fat Man Zoom was a former co-host of, well, not former co-host, but he is the co-host of mine. Is going through some health stuff, and so
I'm dying, people. I got a brain tumor, and these tumors are freaking multiplying. It's crazy.
Yeah. So, but it's good to have you on stream, man. Feels really good. But I call for reinforcements as well. We got Don from the Don Fran Show hanging out too. Just a crazy day.
I can't beat that intro. Fat Man's got me beat on the intro. But I do want to ask, did he see my other intro of you?
Oh, no, he absolutely butchered it.
Yeah.
I butchered it or Don butchered it?
No, Don
did. I froze like the second we went live. I was like, well, here we are. Forgot everything Brad says.
He was even like, he got to the starting five. He's like, oh, I remember this. I got this covered, and then completely butchered that as well.
Yeah, I went like the starting 7 or 8.
It's all right, man. We'll get you there.
But anyways, it's good to have the band back together. We got a lot of people spreading the love here. We got Trevor saying Zoom for Fat Man Zoom. But what's up, boys? Lost one. Fat Man Zoom, how are you? From Savvy Money Show. Pastor David Hopper tuning in, showing some love for Fat Man Zoom too. So lots of people happy to see you, brother.
Yeah, it definitely feels good to be back. Seems perfect timing with the earnings we have today. So I'm hyped. I feels like the market I told you I've kind of been on the DL. We've talked about me coming on, and I needed, just because I've been so out of the loop, which is my medical stuff, I needed to catch up. But I've been on, kind of on the sidelines the past couple of weeks looking at the market, and I think the market realizes that Fat Man Zoom's back. I think
it might, man. Just to give context to what's been going on, bro, and anybody else who's watching that maybe hasn't been keeping up with inflation has been the top story, right? Virtually for the last year, better part of a year, we've seen inflation running rampant. We saw inflation numbers for the month of June at 9.1% year over year. But things are starting to come back down, and we saw that on today's numbers. Today's print came out at 8.5% year over year. So inflation is still going up, but not as quickly as it has been, but compared to the 9.1. It actually came in below expectations. Analysts were expecting an 8.7% CPI print. Today we got an 8.5 for the month of July. So and a lot of things have come down. We've kind of already seen this, just if you've done any kind of shopping or traveling or what have you. Gas has obviously come down. We've seen some prices in food come down as well. It's still up there. Make no mistake about it. The Fed's job is not done. They're going to continue to raise rates, but maybe not raise rates as aggressively as they have over the last 3 to 4 months. So we'll see what they say. when we hear from them in September. They're taking a break off in August. Remember that. So this is going to be very interesting to see how the Fed's going to react to what we're seeing right now. And the employment numbers obviously blew out of the water for the month of July as well. 500,000 jobs added in July, which was far beyond anybody else's expectations. So this technical recession, if you want to go use that term when it comes to GDP slowing, it indicates that we're in some sort of recession, but everything else kind of just doesn't. And I think that we could start potentially see that carry on into 2023 if we start to see employment numbers come down. But right now, that just isn't happening. And so that's why the market rallied today. I'm looking at the overall markets and I'm seeing some crazy numbers. The Dow's up 525 points. S&P's up 87 or 2%. And the NASDAQ is the big winner here. It's up 350 points, almost 3% on the day. So it's been a hell of a rally in the overall market. That's just really, really kind of feels good to see. And we were just talking off air. Don started to shift his sentiment a little bit to being bullish. What are you bullish for the rest of the year? Where are you at with that, Don?
For now, that's the first signs of it. I'm probably a little bit different than most though, because I think if the bottom is in, then so is the top. I think we're going to be range bound. So for traders, it should be awesome news. For investors, they'll watch their account go up, they'll celebrate, they'll watch it go down. Like for the next year, largely, I think looking back after a year, we'll probably see a whole lot of up and down and still kind of right there. Dividend players will make a little bit more. Anybody just sitting in a regular stock, though, probably going to see some ups and downs.
Yeah. Yeah, I don't think the volatility is over by a long shot. And I think that's going to, continue to roll into the Fed conversations and stuff like that if they continue to actually be as aggressive as they have been. But there are some signs that some of the interest rate hikes are taking effect, at least to some extent. So we'll have to see what they say in September. We do have some earnings that we're going to be reacting to in just a few minutes. I kind of wanted to touch on Disney real quick because Don, you had also mentioned that you're in Disney. I know that Fat Man Zoom in his long-term account and Mini Zoom has Disney as well. The expectations here for Disney is 99 cents per share, 21.01 billion, for the quarter. And it's been a rough go for them. The stock hasn't been performing all that well because of streaming, more or less. And this has kind of been the theme. Netflix obviously has suffered. We've seen a lot of other streaming services such as Paramount also take a hit. But Disney is so much more than that, right? We've talked about the largest or the biggest revenue driver for them was the parks. And we've heard from the airlines and some of the travel hotels and Airbnbs and that sort of thing. They're all saying that everybody is still on absolute fire. They're seeing record numbers. The airlines are going to be profitable this year. We heard from Southwest and Delta on that. And so there's reason to believe that Disney could also do well as it relates to travel overall. So that's what I'm kind of looking forward to. But this call could all be squashed by some of the streaming numbers that we are seeing because those are still coming down pretty significantly.
Streaming numbers in Disney or across the board?
Well, streaming numbers across the board have been down for sure.
I haven't been watching it, but go ahead, Fat Man.
I think both. I mean, the reality of companies are still bringing people back to work. So while some people have been, there's still a decent amount of people being remote. I mean, Marriott, for example, is still remote, but they're moving in the next couple months to a couple days a week. United, similar situation. They just moved. So there's still a lot of people that are working from home. And so we're already seeing the streaming being impacted. But I think it's actually, there could potentially be more of a decline with people going back to work as well. So watch out for that. But to your point, Brad, that's the long game. They're going to continue. I'm not necessarily concerned about Disney and their content. Obviously, year over year is going to be a little bit challenging, but over time, their streaming is going to be totally fine, I think. And if anything, you and I have talked about this a lot. That's great you're doing well with streaming, but there are so many other revenue stream opportunities, and the parks, there's still so much upside.
Yeah, and one thing that I will say is that with the upside to the parks, and one concern that could arise this quarter from the streaming side of things and the content side is the 40-year partnership that ESPN is ending with the Big Ten College Sports Conference, and this opens up so many other doors for some of their competition to just swoop right on in. So Apple has already expressed interest in this, and so this could also put a lot of pressure on Disney on the streaming side. So it makes the other sources of revenue for Disney all that more important. I don't know exactly what transpired there, why they're ending that 40-year relationship. There's some speculation as to why, but no clear concrete reason as to why that's happening. But that is pretty significant for Disney, and certainly a blow for ESPN that could impact some of the streaming revenue that they're bringing in for the future.
Can I speculate on that Big Ten thing?
Yeah.
So Disney, I don't know how many people like follow ESPN and the sports, but like one of the big headlines recently has been Paul Pierce, who was a Hall of Fame NBA basketball player, retired. He just got fired from ESPN. Have you heard about this, Brad?
No.
Don, have you heard about this?
No.
He basically went on his IG live at this after party, and they were like, it was him and his boys, and there was like half naked paid women. I don't know if they were strippers. I don't know what they were, but they were like paid women. Clearly everybody was smoking weed. Everybody was like playing poker, and literally Paul Pierce is like messed up, whether it was on drugs, alcohol, or both. But he's like on his IG live, wasn't doing anything wrong per se, and not anything that probably most athletes don't do. But if you're on ESPN, who's owned by Disney, you can't do that. So he gets fired. So I bring that up only to say that, you know, number one, in sports Big Ten, when you look at Big Ten for everything outside of like Ohio State football and a couple of teams, yeah, there's a little bit there, but I don't think I'd feel like if I was ESPN as well, like I'd probably not be too interested in that. I'd be doubling down on stuff like the UFC, who's growing like gangbusters. And to be honest with you, a lot of these, I feel like they're just getting a lot of dealing with these athletes is causing a lot of problems in general. So I think they're trying, maybe they're distancing themselves. I'm speculating because obviously ESPN does really well, but I think you deal with college athletes and you deal with a Big Ten that's like not this. To me, I don't think it's the strongest conference. I mean, I think SEC is, but I feel like I don't know if the juice is worth the squeeze. So that's probably a far reach for me because college football is not going anywhere. Yeah. But there's a lot of other opportunities there, and specifically the UFC, which the UFC keeps a tight, like sort of a tight grip on everything. And I think there's more opportunity there than there is in the Big Ten.
Yeah, I mean it's a valid point. So we'll see if Disney even says anything about that on today's conference call or in their earnings. But thought it was at least worth mentioning and worth chatting about, and I appreciate the sentiment on your side too, because I had no idea about all that was going on.
You go to YouTube, Google it. It's pretty. He was messed up. He was whacked out of his mind.
That's hilarious. All right, so we got a lot of other stocks that are going to be reporting. I know that we stuck on Disney for a while, but that is the headline after all. One other thing, Don, if you want to go ahead and pull up the charts there, we do have Sonos, and this is one that Fat Man Zoom has always liked, and I always thought was a good solid sleeper as well. Now, Sonos has been one that has gone through some ups and downs, but the company itself has been really solid. The stock is another conversation, and you can see here how volatile it has been. But for me, I think that just the company overall, despite some of the inflation issues and what have you, they've handled the demand for their products very well. They've already partnered with Volkswagen over the last year and have done a lot of really good things. As the market has officially closed, because Don hasn't figured that out yet. Expected earnings per share, according to Seeking Alpha, is 21 cents per share, $421 million in revenue. And as these earnings come in, of course, I will be, I'm sure myself, Fat Man Zoom, whomever will try to pull up those numbers as well. But How you guys feeling about Sonos?
Don, you got it.
I don't know. I'm kind of indifferent on Sonos. So I've been bearish. I've been short the market for so long. Paid out just fine. Finally switching gears to bullish. So like my whole mindset has been, where does the money come to first? And it's been like the giants, the big names, the things that actually are cheap. Like valuation doesn't really mean crap when everything's just selling off. But when it's time to buy and bring that money back in, where does it go first? And Sonos hasn't been on the radar. So I don't know if it's it's not one I normally track. I don't like to pretend, but I don't know. It looks all right. Hopefully it just keeps on this path up, but I don't know what they're doing numbers wise. I don't know anything about this other than what the chart says. And
yeah, I mean, Brad, you and I feel like one of the few channels that have been talking about Sonos for a long while. And not that we've been like pumping it up, but we've had an eye on Sonos and we've been fans of the company in general.
Yeah.
The challenging thing for me, I guess the question regarding Sonos is not viability of product. It is a great product. And ironically, I actually was online today for our Puerto Rico trip. I was going to buy one of their portable Bluetooth speakers that are like waterproof. They look badass. And everything they do is clean. It's efficient. It's awesome. There's space in commercial. But the question to me, like, comes as a company, like long-term sustainability and viability, because the product is awesome and it's easy and it's seamless and it lasts. But I mean, Apple's got speakers now. Google's got, like, everybody's got speakers. Amazon's got speakers. So like the technology has to get better, but it's not far off. And that like somebody I've used Apple's, I've used Amazon's, I've used Google, and like, I don't think they definitely aren't better than Sonos, but I don't think they need to be better than Sonos. I think they're very convenient and they're good at what they do and they're cost effective. And I think that's what scares me is Sonos going to be able to hang around for 10 plus years and sustain growth? That's scary to think about. I don't know if they can.
Yeah. And that's a very interesting point as well. To that end, over the last 2 years, Sonos has beaten earnings 75% of the time and has beaten revenue estimates by 88% of the time. So again, estimated earnings per share at 21 cents and $421 million in revenue are expected. Over the last 2 years, it seems as if that they have either met or exceeded those most of the time, but we will see. And I think the real key is, and you touched on this, is the future. What are they looking at for future revenue? And forward guidance, as we all know, is super important and it really influences the stock overall. So that one will certainly be interesting to watch. We have a couple other ones. I don't know if I see any of them moving just yet. Let me see if I can pull up a couple other ones. We have Bumble as well, Matterport, Dutch Bros. Dutch Bros has been an interesting one. The growth has been really extraordinary. If you guys aren't familiar, they're a West Coast coffee company. They reported a really bad quarter last time around, but since then have made an amazing move. They bottomed out at $20 a share right after they gapped down to that, right after their earnings report. And the stock is really starting to move right now, actually. So I can pull this up, but they've moved over 100% from bottoming out on their last earnings report. Right now, the stock is trading up 5.5%, and I can go ahead and pull up those numbers as we're chatting here. But Dutch Bros has really been crushing it from a growth standpoint. If you guys are out in the West, I'm sure you could probably attest to that. They're just popping up everywhere.
I mean, the best ticker you could have.
I literally have one going up down the street. I was so upset because I thought it was something else. I was like, it's going to be like an ice cream place. It's going to be like everything but coffee. I was like, Dutch Bros, don't they suck? Like, I don't drink coffee, so I don't know, but they are going up everywhere.
Yeah. I didn't realize they were out in Kansas or Missouri. That's crazy.
Yeah, only like 500 of them, like a million. Like, just, it's like chicken pox. They just keep going up.
I had no idea they had reached that far out. That's crazy.
Looks like I'm making a bunch of money, though. Disney's going nuts. Did they release their earnings, or that just algos?
They must have. Let me see if I can pull up Disney. I don't have anything on Dutch Bros yet.
I don't hijack anything. I just saw like the
Oh,
bright
no,
green
you're fine,
candle
you're
just
fine,
shoot
you're
up. I was like, well, we know what the comments are about to start saying. Check Disney.
I'm not seeing Disney. Yeah.
Yeah, I'm not seeing anything on Disney either.
Looks like everything after hours gapped up a little bit. Well, at least the bid is up a little bit.
Oh, wait. Nope.
So I have something on Dutch Bros. Looks like they came in. I don't have the exact earnings per share or revenue just yet, but I can give you a couple of highlights here that could be moving the stock. They opened 31 shops and revenue is up 44% year over year. Here we go. 186.4 million. I believe that is a beat on earnings per share. Let me just confirm that. Expected, revenue. Revenue is expected in 182, I think.
I got Disney already.
You know, it's gonna make or break bros, the Dutch bros.
So random information. It looks like Disney subscriber beat estimates for Q3. They estimated 148 million. They're at 152 million, so pretty handily. And they're going to raise the ad-free streaming price. Obviously means more revenue. And then from a earnings perspective, it looks like they beat on revenue, 20.9 billion, we'll say, came in at 21.5 billion, and then earnings per share estimated 96 cents, came in at 109, so looks pretty clean.
And the stock is reacting off of that as well. Disney was up 4% before the close. Now it's up an additional 4.5% and climbing here. I think the real key, one of the big key moves, why it's moving, is probably that subscriber base. I think this is the first streaming this quarter and this earnings season that's reported and beat expectations for subscribers. That's actually pretty impressive. 148 million, you said?
152. 148 was the estimate, came in at 152.
Wow, that's pretty awesome. And then they beat across the board as well. And you can see the stocks continuing to climb up from here. This to me was almost a slam dunk coming into these earnings, just because expectations were so low and the stock had suffered so much over the last year. It kind of felt as if, and we've seen this theme over this earnings season where things have been so bad that they're actually good, and that even stocks that have reported on misses but didn't miss as bad as some may have thought have moved to the upside. In this case for Disney, it crushed everything across the board, including subscriber growth and earnings per share as well as revenue. So this is also all good stuff for Disney, and you can see the stock's now up 5% after hours. Pretty decent move for them.
I mean, who's positioned better than Disney? Like, let's be honest. ESPN, the king of sports, take away what I said about Big Ten. I mean, they have a firm grip on pretty much everything. But then you look beyond that, their content outside of Disney, let's not forget they own Hulu, which Hulu has such huge upside. Like, I feel like Hulu is so underutilized, and you've got to imagine that at some point they're going to be like, hey, how do we get Hulu like kicked up? And it's essentially basic cable. If they get Hulu into gear, obviously ESPN is going to be fine with sports and their normal Disney like traditional content. Who's better positioned than them?
Yeah, I agree. I don't know if there is anybody. I don't know if you recall, we talked about this. Years ago now. I think I want to say it was about 2.5 or 3 years ago, where I had mentioned. I think it was 2 years ago, because that's when Disney Plus really kind of came on the scene. The growth there. If there was one company that I thought could knock off Netflix, it would have been Disney. And I mean, it certainly seems as if they're still on track to at least trying to go for that number one spot. I don't know if they'll ever get there, but it certainly seems as if they're on that kind of trajectory with Netflix, losing subscribers, and apparently they're losing them to Disney.
I think if there's one comment I'm going to make on that, because I've been trying to see who's going to dethrone Netflix, because Netflix been sitting on throne after a while after they put Blockbuster out of business.
Yeah.
But I don't think there's a dethrone event. I think it goes from more of a king to like a round table, a board of directors. Like, there's just going to be everyone now. So like the whole market share, I think once we everyone finds their seats, it's almost irrelevant. Because just for the fact of how many are going to have Disney and Netflix, some are going to be diehard into one, but I think the majority are probably going to have multiple. So it'll just be how can they bring people and keep people in? What's their retention like, regardless of everything else?
Yeah. Agreed. All right. So looks like moving on. Looks like we got some crazy movement on Sonos. That stock is down 20% after hours. And I want to kind of revisit Dutch Bros as well in a second, but that seems to be the one that's been catching a lot of attention here. So let's go ahead and pull up some Sonos. That stock's getting absolutely crushed. Looks like they came in and beat estimates. They came in at 19 cents per share. Sales came in at 371.8 million, and that misses the $419 million mark. Could be one big reason why the stock's selling off.
It actually looks like they actually slightly missed earnings per share too. I could be wrong, but it looks like 21 cents was it looks like they missed by 2 cents, and then they missed by 15 million on the revenue.
Yeah, must be. You might be right. I think you're probably right on that.
I mean, Brad, I wish I would have said this because I was thinking it. And I hope this is what I implied. Like, I was a little nervous, but like, don't you think they're like a victim of their own success? Like, they've been crushing earnings for the entire pandemic. And again, now that you're not like really at home as much, like it's hard to not only competition.
Uh-oh.
Okay, I was like, was that me? Or really right as I changed charts, it's like, no way.
Must be Fat Man Zoom. Sound like a brilliant comment.
It did. Where's he at? Maybe he froze. Maybe saw him out.
Oh,
where's he at? Is he at the studio?
Yeah, he's at the studio. All right. Well, we'll come back to Sonos. Either way, the Sonos is down a ton. We're looking at this now down 16%. It's starting to give back, or starting to claw its way back a little bit after selling off immediately around 20% on the reaction of those earnings. Let's go ahead and check out Dutch Bros again. Let's pull that up, Don, because they had some really good quarter here too. So as I'd mentioned earlier in the show, they opened 31 shops. The revenue was up 44% year over year, $186.4 million. That is a beat on expectations. They surpassed 600 shops, exceeding $1 billion in trailing 12-month system-wide sales, which is a huge milestone for them. They raised $2.3 million for ALS research. I mean, whether you want to put stock in that or not is neither here nor there, but that is one of the highlights there. This, in general, is a massive quarter for them again, and the stock is obviously being rewarded for that. I'd mentioned earlier when we were chatting about Dutch Bros that it had moved up 100%, over 100% since bottoming out last quarter, and it was a tough quarter for them because of inflation and supply chain issues and whatever else. They tried telling everybody that growth was still very much there. And that's really what they continue to focus on. And it's showing out here in this past quarter as well. The stock's up around 2% after already closing the day up around 4%. And so I think this is probably going to continue to be a really good stock to own. I'm not saying that Dutch Bros is about to take over Starbucks or anything, but the growth there is certainly substantial.
You know what will make or break Bros right now?
What's that?
Their real estate agent. Because they can really screw this up. Because companies like this that are popping up everywhere, looks like they got a bad one. No, like if they start popping up in a bunch of just crappy locations just to get their foot on the map, that can really hurt them. But if they strategically put themselves in the right spot, there's just going to be that long line at Starbucks. And if it's just easy to go right there, and if they're even hanging with them, I bet that'll be what really like. The thing that pops off with me about this one is you're betting right now on their real estate and where they put their actual buildings.
Yeah, because the earnings there certainly aren't quite, but they're very much in growth mode. So very good point to bring up for sure. The concept of just having drive-through coffee shops, and that's their business. That's all they do, is interesting, and I think it just separates them a little bit from the Starbucks and the Dunkin' Donuts world, because they're all, I don't want to say they're all, but many of them will walk up, type of stores. Yeah, that some of them have drive-throughs and whatnot, but this one, just for the specificity of them being drive-through only, the customer service, I would venture to say, is up there with like a Chick-fil-A type of deal. So that I think is what's setting them apart from perhaps the rest of the crowd, and a very competitive crowd, might I add.
Yeah, I'm curious how devoted is this crowd? Like how much what's the brand loyalty to Starbucks? Is it really just because it's good, or is Dutch Bros going to be the one that gives them a run for their money?
Yeah.
Hell no. Get out of here with that.
We're prisoners of the moment right now.
Yeah.
All right. So moving on, there's so much moving. Matterport, Don has it up there on his screen, is now up 17% after already closing today, up 9.5%. So that stock is absolutely on fire right now. It looks as if they crushed expectations. I'm trying to find still the actual numbers here. Here they are. So they came in at a loss of 12 cents. They beat that by around 2 cents. The expectation was a loss of 14. Revenue came in and missed, interestingly enough, by about $2 million. They came in at 28.48 million for revenue. Not quite sure what's going on here. There's got to be some sort of buyback or something that I would imagine probably has the stock moving up so much. I'm looking at this. It says subscription revenue. This is from Seeking Alpha. Subscription revenue rose 20% year over year. Matterport increased full year revenue guidance, and this could be the kicker here, to 132 to 138 million, and it narrows their full year guidance range from non-GAAP to loss per share to 46 to 50 cents. So that could be why the stock's been moving up here after hours. Balance sheet remains strong with 562 million in cash and investments and no debt for Matterport. So stock now is up 16% after hours, after already closing the day up 10%. Only sitting at $5.19 is where the close was. It's sitting around $6 right now. So obviously a long ways to go from where we saw this at its highs, but this is certainly some encouraging stuff.
That's what I say. How long keep the awkward silence up. It is. I'm still definitely. I don't know. What are they doing in the metaverse play? Like the metaverse is like a 10-year down the road play. And it's what they're trying to put everybody. Are they using their data from everyone's houses they've already collected, like in real estate? Is that a play at all, or?
I have no idea.
Like this just throws me off. Like I don't want it to be like when everybody was buying EVs because it's like the next Tesla. Like Facebook put 10 billion into making the metaverse, and like these guys got some 3D cameras that I've looked at like 1 billion times to buy personally. So I don't want to like knock that or anything. But like, what are they like? What kind of backing do they have? Like, is that like a little pet project, or do they have the cash to go all in on this thing, or like, do they know how big of a bite they're taking out right there? Or that's the questions I have.
I don't know. I mean, they have $500 million and just sitting in cash, no debt, 20% increase year over year on subscriptions. That's a great question, but it seems as if they're kind of killing it.
Yeah, I love no debt companies, and not that there's a place for debt. There's a time and place for debt, but no debt companies I'm a huge fan of, especially in this space. Kind of hard to find. I mean, meta platforms, that's why I love them. Like they have a ton of cash and they're flexible. So, I hear you, Don. I mean, it's a fair point to make how this plays out. However, whether Matterport wins or not, you're certainly positioned to win if you're in the space and don't have debt. Most of these companies have a ton of debt. So that's working in their favor for sure.
Yeah. But I worry like Tesla's like a great example. Like everyone can make the not the model car, the first one. The what word is that? The prototype. Everyone can make it. So it's a Matterport's like, hey, we're gonna get into the metaverse. They got $500 million cash on hand, and then turns out a metaverse project cost $1 billion. They're 250 million into this thing already. They find out the actual price tag is something different. Then how do they play that?
Yeah, that's valid. I think it goes back to like I wouldn't invest in Matterport. If I'm being honest, I'm fine with Meta. I'm sticking with Meta. Because I believe in the social network they build, and I believe that they're just so far ahead and have a first mover advantage. So for me, I would not, but I think I would classify Matterport under speculative. And if you want to take a small percentage of your portfolio, great. But should you leverage everything? No. And that's a good analogy, because you're right. Like, to make a prototype is easy. To get into the metaverse, and there's multiple metaverses. To get into it is easy to say you do it, but like, what is going to differentiate yourself? How are you going to, how are you going to surpass, the leaders in this world? And who knows how it's going to shake out. But to your point, there's more risk to me than anything else. And I'd rather go with something a little bit more like well-established and has other opportunities outside of it. And that's fair.
Yeah, I agree with that.
At least it's only $5.
Well, yeah. I mean, the risk reward wise, it doesn't look like it's obviously that crazy. So, I mean, if you like Matterport, you think it's worth taking the risk. It's obviously a lot less risk down here than it was when it was at $37 a share. We do have Bumble as well. That stock is down 7.5%. They came in and missed expectations. Just barely came in at 3 cents per share. They missed by a whole penny. Sales came in at 220 million, so that beat expectations of the 219. The stock that is down now, though, around 7.5%, almost 8%, and I imagine it probably has a lot to do with guidance. Although I haven't really been able to narrow down the reason as to why it's down, other than perhaps obviously missing earnings per share, even after coming in higher on revenue numbers.
I want to speculate real quick. Fat Man Zoom, were you ever on this, and when did you get off? Was it about one of these peaks right up here? Like, is that what we can attribute this to, or
100%
subscriber counts?
100%. I was on Bumble. I got. I'll tell you. I probably could tell you the exact date, and we could see what the candle looks like.
All right, let's see if we can attribute this.
Although I was a bigger Hinge fan, you could look up April of 2021. Which,
yeah. Oh, so we're right.
April or May, whichever candle looks worse.
April. So right around the end of April or May, we're trying to figure it out. Clearly you get off, and then the app just struggles to find users. Like I guess the ladies just got off once they found out you were no longer on there, and
they had no reason to be on Bumble anymore.
Yeah. So
listen, this fires me up, and Brad, you've heard this before, but who's buying Bumble? And the reason I say that is because why would you buy a company whose success is like predicated on people stop using what you offer? Like, if Bumble works, to Don's point, people will stop using it. So now your base is going down and declining. And I know there's like other options for like Bumble for Friends, but it doesn't work. Nobody uses it. You use it for dating. And if it works, you slow growth. And why would anybody want to follow that model?
Yeah. And for any ladies that are watching, if your husband says I'm on Bumble for Friends, he's lying to you. That is a joke. Move on.
Oh God. So this is the nail in the coffin for Bumble here. So management cut revenue guidance for fiscal year 2022 to a range of 920 to 930. Previously was at 934 to 944. So the Fat Man Zoom's point, the user base is diminishing, and really just doesn't look like, at least in my opinion, anything that I would be interested in investing in. The growth here it was probably great during the pandemic and when people were still at home. But man, is not looking good. And really, at the end of the day, in the market, as far as publicly traded companies in this space, if I was to buy one of them, if you had a gun to my head, it'd be Match. MTCH is a ticker symbol there. They've been around forever. They survived the dot-com bubble, and they just know how to run a business, and they know how to run this industry. So even though it is an old platform, people still gravitate towards Match, and they've done much better than any of their competitors, especially ones that are publicly traded.
Yeah. Plus, in this world, I know some people don't really like to admit this. The stock market is a popularity contest, which is also like why Sonos might struggle quite a bit. It just never got the Bose name, or like just never got that popularity. And then it just brings it right back around to who's buying this, like, and why. Like, what would they want with this?
I agree. All right, so just to recap here, guys, we got about 235 of you hanging in here. We had about 300 at one point, but if you're heading out the door, maybe we already covered your stock. Certainly would appreciate if you hit that thumbs up, and encourage you to subscribe as well. If you're not subscribed already, we react to earnings as they come in every day, Monday through Thursday. I'm live at 3:45 p.m. Eastern time, and we cover all of these as they come in. So we did cover Disney, and they absolutely smashed earnings expectations on top and bottom line. They beat revenue, and then also beat the real key. I think the metric that everybody was watching was subscriber growth. They came in above expectations on subscriber growth for Disney Plus. Correct me if I'm wrong, Fat Man Zoom, but I believe you said the actual was 152 compared to the 148 million that was expected for subscribers. So one of the very few stocks that have streaming services that experience growth this quarter. And so that was certainly really impressive. Matterport came in, and that stock is doing really well off of their earnings as well. Sonos, which we had some pretty decent hopes for, but obviously a lot of apprehension. That stock is down 20% off a guidance miss as well. Dutch Bros, one of the key players in today's earnings release, did really well too. The growth there has been pretty substantial, and so those have been your earnings for today. The Coupang was one that we didn't chat about, but I wasn't quite sure exactly how many people were interested in that one. But that stock is up 3.5% after hours.
What's the ticker for Coupang?
CPNG is the ticker.
I pulled up I saw it in the comments. We had it over here for a little bit watching it.
Oh, okay.
I believe you were talking about maybe Disney at the time. So we kind of watched it take off and just on the side sell off, a little bit up and down action, hanging out right now. Overall up.
Yeah, it's up around 3.75%. They came in and beat expectations at a loss of 4 cents. The expectation there was a loss of 13. And so then they also came in and at $5.04 billion, they did miss revenue expectations by $140 million. Product commerce net revenues was up 4.9. That's up 13% year over year. The e-commerce industry has really made a pretty decent comeback. I mean, Etsy smashed their earnings. Amazon did pretty well. And we've seen a lot of other ones. I believe Jumia either has reported or will be reporting this week. And so we'll be interested to hear from that. Fat Man Zoom's one of his favorite e-commerce plays, Mercado Libre, came in and also smashed expectations. The stock's been doing really well since their earnings report. So it could be that we're finally getting over the hump on some of the e-commerce plays that have suffered pretty greatly over the last, I would say, 9 to 12 months.
Looking forward to it. Excited. I want to note also, I was reading about Disney. Apparently, India, we talked in the past about the international opportunity for Disney. Apparently, they saw they're expecting pretty big growth for India, specifically surrounded the Cricket World Cup, which they have the exclusive rights to. So they're expecting some big numbers for subscriber base. That came out of the earnings as well.
Good stuff. I was looking up. Somebody asked about Rivian. I think Rivian's earnings are tomorrow, but I could be wrong about that. Yeah, I believe they are. Let me double check that. But it has been a pretty fun earnings afternoon as we react.
Hey, Brad, let me ask you a question.
What's up?
How much nicer is it to not be by yourself?
It's so good. It feels so good. I mean,
it sucks being solo.
It does. I mean, look, it sucks because I don't have from a logistics standpoint, I don't have other people helping me look up these earnings as they come in, right? So like I feel like I'm scrambling a lot, but also just like being able to chat with you guys about it too. It's like, it's so much better having other people on.
Well, it was fun.
Yeah, man. I appreciate you being on this afternoon. Let's we'll go ahead and end it there, guys. I know that I promised shit or legit, but things have kind of ran over a little bit today. We'll catch up on shit or legit stocks tomorrow. And so make sure you stay tuned. Save them all up for tomorrow and throw them in the chat. But guys, thanks so much for tuning in. If you haven't checked it already, there is a link in the chat for Seeking Alpha. You can get the premium service from them for $99. That's originally $249 a year. So that's a pretty steep discount just for watching today's show. So make sure you click on that link if you guys want that Seeking Alpha premium service for your due diligence. And they're actually really good tools in their premium side of things. And that's actually where I got all of my expectation numbers from for this show. Certainly appreciate it. And thanks so much for tuning in, guys.
Of course.
Bye.
Have a good one.
Bye.
See you, Snook.